Hello and welcome to the Business Standard Morning Show. I'm Veenu Sandhu. It's the 23rd of June 2023 and here are the top stories of the day. Can Tesla do a Maruti for India's EV ecosystem? How can new IITs catch up with older ones? How to play PSU stocks amid divestment slowdown? And what are green diamonds? A recent meeting between Prime Minister Narendra Modi and Tesla CEO Elon Musk has rekindled hopes of Tesla entering the Indian market. In Musk's own words, the Texas-based company will be in India as soon as humanly possible. In our first story today, we focus on the EV components and battery space. Bhaswar Kumar tries to gauge whether or not Tesla's entry into India will give a fillip to this nascent sector.
I'm actually incredibly excited about the future of India. I think India has more promise than any large country in the world. He really cares about India because he's pushing us to make significant investments in India, which it is something that we intend to do. And we're just trying to figure out the right timing. In a nutshell, it was a fantastic meeting with the Prime Minister. I'm tentatively planning to visit India again next year.
Signs of thaw are clearly visible. Tesla Motors CEO Elon Musk, who has been trying to drive the company's electric cars into India since 2019, said that the EV maker would set up shop in the country as soon as humanly possible. Musk said that while Tesla did not want to jump the gun on an announcement, it was quite likely that it would be a significant investment in the company's relationship with India. Musk's statements came after his June 20th meeting with Prime Minister Narendra Modi, who invited the American entrepreneur to explore investment opportunities in India during his state visit to the US. Citing an unnamed source, Reuters had previously reported that Musk would brief PM Modi on plans to set up a Tesla manufacturing base in India. These developments come after reports emerged in May that Tesla was considering a plan to manufacture its EVs in India, without insisting on its earlier demand that the import duty on completely built units be lowered first. On May 18th, a business daily had reported that a team from Tesla was having meetings with ministers and officials in the Prime Minister's office, and they had come with a plan for manufacturing in India. The report said that the government would offer import duty concessions on components required for domestic manufacturing, instead of allowing Tesla to import completely built units at concessional duty. The details of Tesla's proposed plans are yet to be known. Still, a key question arises. Will its Indian entry do for the country's nascent EV ecosystem what the likes of Maruti did for its auto component vendors? Over the preceding decades, Maruti Suzuki has been largely credited for the emergence of an Indian ecosystem of auto component manufacturers for internal combustion engine vehicles. Today, the industry, which comprises both large corporations and small and micro enterprises, accounts for over 2% of India's GDP and directly employs 1.5 million people. According to the India Brand Equity Foundation, the industry was valued at almost $57 billion in FY22 and is expected to stand at $200 billion by FY26. And the industry has been gearing up for the big shift to EVs in recent years. In fact, known names like UNO Minda are already working on EV-specific parts like DC converters, chargers, and charging cables. But India's EV component market itself is still nascent. According to market research firm P&S Intelligence, it was worth around $536 million in 2019 and is expected to grow at a CAGR of 22% between 2020 and 2030. This leaves a lot of room for new vendors to emerge, alongside established ancillary makers entering the field. Against this backdrop, will Tesla be the Maruti for India's EV component sector and lead to the emergence of more Indian vendors? Or will the company lean towards asking its existing vendors, most of whom are based in China, to set up shop in India?
So if you look in the past, this Maruti Suzuki, when they set up manufacturing plants in India, that had a huge impact on Indian ecosystem, especially for the component manufacturers, MSMEs, etc. And this had a second order effect. So even Tesla setting up factories in India will have a second order effects on vendor ecosystem. We should also remember that Elon Musk is a firm believer of open sourcing all their technologies. Even all the patents that they've developed have been open sourced. So when they come to India, it's highly likely that a lot of these technologies will be adapted by Indian manufacturers and Indian vendors ecosystem. So my belief is that the local ecosystem currently is not very well evolved, but when Tesla comes here, we will get evolved and rise up to the levels of Tesla and start supplying to them. We will also use that capability for our local manufacturers as well for the Indian OEMs.
In Tesla's case, they're in the higher end of EV. So it will create a new segment of component manufacturers here in India. Some of their products actually may go to existing component manufacturers who are actually aggressively in this space. So both things are possible. And the ratio of what happens between the Indian companies and the Chinese companies really depends on Tesla and how comfortable they feel with the supplier. Whatever it is, you will see an increase in component manufacturing in India.
At present, apart from Tesla's autopilot chips and algorithms, almost all other parts are reportedly made in China. Speaking of China, Tesla is also the largest customer of Chinese EV battery maker Contemporary AmpereX Technology Limited. Meanwhile, India doesn't have much in the way of EV battery manufacturing capacity, although the government and major business houses like the Tata Group are making efforts in this field. So, how will Tesla's entry help in setting up an EV battery ecosystem in India?
We do have a lot of researchers, both academic as well as corporate. People are coming up with new battery technologies. However, what we do not have in India right now is the battery manufacturing itself. All of this almost is imported from China. The coming of Tesla to India will start the initiation of battery manufacturing in India, because since Tesla is a giant OEM known across the globe, there will be a push from Tesla that we need to set up a battery manufacturing in India. Also, there will be a push from the government as well to Tesla that they have to set up a battery manufacturing here, because currently we have found lithium reserves in India, huge lithium reserves, and we cannot keep exporting this to foreign countries.
And Ford and GM have actually adopted that charger there for their systems. So at the high end, you'll see the charging infrastructure actually happening, and Tesla will drive the charging infrastructure. The second part is actually in the case of the battery. If they choose to come under the battery PMP, or the PLI under the battery, then they will have some norms for indigenization, and they'll have to follow that, etc. Right? And could at this stage they be included in that system? We don't know. It's for us. It's a question up in the air.
Ultimately, the extent of Tesla's boost to the EV ecosystem will depend on three factors. First, modifying the PLI schemes for auto and EVs and batteries with increased outlay and tweaked incentives, which may reportedly happen after the government and Tesla reach an agreement. Second, Tesla finding export success with its made in India EVs, given the price-sensitive nature of Indians. Third, a big jump in the rate of four-wheeler EV adoption.
She'll soon be quoted on the front page. Business Standard.
Tesla's China sales, meanwhile, have tripled in the last 3 years. But given the ongoing changes in policies and its talented pool of techies, India can become a good alternative. A lot of these gold standard techies come from the IITs. But it seems older IITs still have an edge over the ones set up recently. A CAG report has indicated that the newer IITs are falling behind their counterparts in terms of performance and overall quality. So how can newer IITs catch up with, say, an IIT Bombay or Madras? Ayush Mishra finds out.
Indian Institute of Technology Bombay was in the news this week. One of its noted alumni, Infosys co-founder and chairman Nandan Nilekani, donated 315 crore rupees, marking the golden jubilee of his association with the country's prestigious institution. IITs need no introduction. They attract the best and brightest students from the country who burn midnight oil to crack its entrance. And it's a gold mine of sorts for the both national and international companies who throng its campuses every year to hire the best talent. And the list of noted alumni is long. Sundar Pichai, N.R. Narayanamurthy, D. Subbarao, Sachin Bansal, Raghuram Rajan are a few of them. But a look at their alma mater reveals a common thread. Most of them passed out from IITs which were established before 2008. There were 7 IITs prior to 2008. The number increased to 15 by 2009 and 23 by 2016. And according to the National Institutional Ranking Framework, ranking for 2023 released by the government, 7 IITs found a spot in the top 10 institutions of the country. And in the engineering section, 8 made it to the top 10. And all of them were established before 2008. The Controller and Auditor General's December 2021 Performance Audit Report had said that the IITs set up in recent years have fallen short on almost all performance metrics, including infrastructure, governance, and student intake. The new IITs continue to struggle with inadequate infrastructure, faculty shortages, financial dependence, and difficulties in attracting bright engineering students, resulting in adverse impact on research projects, patents, and overall academic performance. So, how long will it take for the new IITs to catch up?
It will take at least 30 to 40 years for the newer ones to reach where the older ones are today, because that is how long it has taken for all the old IITs to reach where they are today. And so academic excellence cannot be created in a short span of 5 years or 6 years or even a decade. It is a proposal which has a long gestation period, and it is certainly going to take very long for the new IITs to reach where the old IITs are today.
Newer generation IITs are really catching up. I think last half a decade, there's a lot of progress what they have made, but however, they continue to reel under the shadow of the first generation IITs. And I think some of the areas which they really need to focus on is actually the perception building. I think that's something which is very, very essential, because some of them are doing great work, but I think it's still not known to the larger audience or the larger world. I think that's something which is the foremost agenda that the newer IITs need to carry, is to change the perception about them.
The CAG report also highlighted the inadequate faculty to student ratios in the 8 IITs established after 2008. And how can the new IITs catch up?
The areas which they can really focus on, one is on the research, because there's a lot of focus which the government of India is kind of putting on the research, how India can become the research hub, whether it's to do with biotechnology, whether it's to do with on the green technology and various other areas that we are looking at. Also, they can focus on the pedagogy. It's not that they really have to follow the traditional form of learning which the erstwhile IITs have been doing. How they can bring back the novelty factor in the pedagogy. How they can start working on certain blended programs, which could be blended either with the industry-linked programs or blended in terms of the way they are conducting their classes. Also, while there has been a history of the IITs producing entrepreneurs, but can the newer generation IITs focus a lot on the entrepreneurship? Can they take that as an agenda, which can also help in a lot of job creations? Because if they are IITs can create a lot of entrepreneurs, how they can contribute to the job creation in the country.
So how can industry, which gets its brightest talent from the IITs, help?
And I think today, the kind of investments which are being made by the government is about 51% of the funding comes from the government, and only the corporates today are contributing just about 33%. Whereas if you look at some of the evolved economies, the contribution of the industry or the private sector is almost like about 67%, which is double of that. I think that is where the newer generation will probably have to focus a lot in their industry connect.
Indeed, newer IITs have a long road ahead, but the path is already beaten by the older ones which they can follow. And they can carve a niche for themselves too. Newer IIMs, it seems, are showing the way. IIM Kozhikode recently toppled IIM Calcutta, which was established in 1961. A little push from the industry will also be of great help.
After this analysis of the country's premier institutes, let us turn our attention towards financial markets. Shares of select public sector undertaking companies have registered an impressive rally in the last 1 year. So are these PSUs worth your money? Harshita Singh finds out in our next report.
Shares of public sector undertakings or PSUs have returned to record high equity dividends to the central government for FY23. The government is expected to garner an all-time high dividend of Rs 63,056 crore from 67 listed PSUs for FY23, which is 25% higher than the previous fiscal. At the bourses, the Nifty PSE index notched a new high on June 21. Stocks such as HAL, PFC, Bell and Oil India have led this momentum, surging up to 51% over the last 6 months versus a 4% rise in the Nifty benchmark. Going forward, analysts expect the overall PSU space to do well, but suggest investors stick to a selective approach. Gaurav Dua of Sharekhan is bullish on public sector banks, but they have seen a strong upside in the last year, so investors should now be selective, he suggests. We are now more positive on financials such as PFC and REC and see a lot of value in oil marketing companies, as lower oil prices could lead to re-rating for these stocks. Railways is another good play given its structural growth story, said Gaurav Dua of Sharekhan. Besides these, power sector PSUs are also in favor with analysts, while others like public insurers face high competition, they say.
The third is power generation, distribution and finance. Now these are monopolies. They offer good dividend yields, they have low risks and they will provide medium returns. The fourth is consumer facing, stocks like MTNL and insurance companies. Now here the PSUs lag because they are not nimble-footed to compete with the private players. The last category is banks. Now banks have performed well in terms of catching up with the private competitors, in terms of credit growth, in terms of asset quality, etc. Expectation of divestment can trigger up moves in banking stocks from time to time, and this can be medium-term picks.
Among individual stocks, Samco Securities picks these stocks.
State Bank of India and Bank of Baroda from banks, Railway Vikas Nigam from railways, HAL and Bharat Dynamics in defense, and NMDC and BHEL in power. These are some of our preferred PSU picks across segments for the medium to long term.
That said, the government's divestment drive has been on a slowdown with recent delays in stake sales of Hindustan Zinc and Concor. Any new divestment is also believed to be unlikely in 2023-2024. Thus, divestment remains a key trigger to be monitored, which can boost the related shares. Today, on June 23, markets will track global cues for direction.
He's making plans for an early retirement. Business Standard.
The government, meanwhile, may meet its disinvestment target for the current financial year even without selling fresh stake in the PSUs. That is, if its plans for the IDBI Bank and Concor go through. But right now, all eyes are on Prime Minister Narendra Modi's US visit. On Wednesday evening, he presented a bunch of gifts to US President Joe Biden and First Lady Jill Biden. The one that caught everyone's attention was a 7.5 carat lab-grown green diamond. We have all heard of blood diamonds, but what is a green diamond? Let's find out.
Prime Minister Narendra Modi, who is on a 3-day state visit to the United States, earlier this week gifted a 7.5-carat lab-grown green diamond to the First Lady of the United States, Jill Biden. The diamond was gifted in a box made using Kashmir's papier-mâché technique. But what are green diamonds? The word green in green diamond does not come from its color, but from the method using which it is produced. A green diamond is a diamond that is not extracted from the earth, but is developed artificially in a lab using eco-friendly means like solar or hydro energy. The waste produced in the process is also disposed of using environmentally friendly techniques. Green diamonds are made using two methods: high pressure, high temperature or HPHT and chemical vapor deposition or CVD. In the HPHT method, diamonds are created by placing small diamond seeds in carbon-rich growing chambers. They are then supplied with the required heat and pressure. The electricity produced to provide these two things is produced from renewable energy. This method also ensures that the carbon that is emitted by the diamond is extremely low as compared to mining. The diamond that Prime Minister Modi gifted to Jill Biden emits only 0.028 grams of carbon per carat. In the CVD process, the diamond seed crystals are placed in the chamber and it is filled with a carbon-containing gas. The chamber is then heated to about 1200 degrees Celsius. The heat causes carbon to precipitate from the gas and deposit on the seed crystal. The diamonds are periodically removed to polish the top surface and then placed back till the final product is made. India is one of the world's largest producers of green diamonds using the CVD method. It must be remembered that in these methods, the heat and electricity used is produced using green methods. In the budget 2023, the center had announced the elimination of custom duty on the seeds used to produce green diamonds from 5% earlier. The center also approved a 5-year research grant to the Indian Institutes of Technology, Madras, to encourage the indigenous production of LGD machinery, seeds, and recipe. Moreover, it proposed to establish an Indian Center for Lab-Grown Diamonds at IIT Madras with an estimated cost of 242.96 crore rupees over 5 years. The aim of Incent LGD is also to provide technical assistance to industries and entrepreneurs in promoting indigenous manufacturing of both CVD and HPHT methods. As these diamonds are made inside a lab, their properties can be enhanced for various purposes. So, they are used in various other industries apart from jewelry. For example, they are widely used in cutters due to their strength and hardness. Also, pure synthetic diamonds are often used in high-powered transistors and laser arrays due to their high thermal and low electrical conductivity.
I'm backed by the nation's trusted bank, SBI, the banker to every Indian.
A green diamond can cost as high as $500,000 per carat, depending on its cut, quality, and intensity. Well, that's all for today. For more news and analysis, please log into our website, business-standard.com. Thank you for watching.
If you like this video, share it and subscribe to Business Standard. For more news, views and insights, log on to www.business-standard.com. Do also follow us on YouTube, Twitter, Facebook, Instagram, Telegram and LinkedIn.